This is more on the consumer sentiment which got hit, and the jobless report which came on Friday. The US economy added just 143,000 jobs in the month of January, but the unemployment rate fell to 4%. And this is a jobs growth in January which is down significantly from an upwardly revised 307,000 mark in December month. This one missed consensus expectation of 169,000 for the month. The report made significant revisions to 2024 totals. The report also said that the wildfires in Southern California and even the frigid temperatures in large part of the country in January had no discernible effect on payrolls. However, the household survey showed 5,73,000 people failed to report for work because of the weather conditions, and that's the highest for any January month since 2011.
Okay, so that is sounding very adverse when it comes to the US market. Meanwhile, Chicago Federal Reserve President Austin Goolsbee termed the January jobs report solid. However, on the tariff front, he added that the long-term inflation expectations are well anchored. Additionally, it looks like the central bank is likely to hold rates here on with the intent to achieve that 2% inflation target.
Okay, and in the meantime, the market continues to be on the edge with Trump's tariff strategy over the weekend. US President Donald Trump said he will be announcing 25% tariffs on all steel as well as aluminium imports into the country, which would come on top of existing metals duties in another major escalation of his trade policy overhaul. He said that the US would match tariff rates levied by other countries, and that this would apply to all countries as well. Remember, during his first term, Trump imposed tariffs of 25% on steel and 10% on aluminium, but later granted several trading partners duty-free quotas, including for Canada, Mexico, and even from Brazil.
It's not looking good for China as well, because shifting focus to China, where consumer inflation has accelerated to its fastest in 5 months in January, while producer price deflation persisted, reflecting mixed consumer spending and weak factory activity. Now, according to the analyst community, deflationary pressures are likely to persist in China this year unless policymakers can rekindle the sluggish domestic demand. The consumer price index rose of 0.5% last month from a year earlier, quickening from December's 0.1% gain. Core inflation, excluding volatile prices for food and fuel, sped up to 0.6% in January from the 0.4% compared to the previous month.